Hello, my name's Stephanie McMahon, and I'm head of research at BNP Paribas Real Estate. And I have the great job today of asking the questions. Usually, people are asking me the questions, but today I'm asking my colleague Dan Bayley all about return to work. Dan, over to you.
Hi, yes, I'm Dan Bayley, and I'm head of tenant representative at BNP Paribas Real Estate in the UK. And Steph is going to be asking me some, I'm sure, pertinent and interesting questions around what it is like at the moment for occupiers returning to work or not, as the case may be.
Perfect, thank you. So let's kind of go straight to the nub of it and think about density, because that's the kind of question that's on the top of everyone's mind is how do we occupy these buildings? How many people do we have in them? So being an analyst, what I've done is I've surveyed colleagues across Europe, and we've looked at our own portfolio. I've asked my peers sat in Germany and Spain and Italy how their buildings are being used at the moment. And there's quite a spread, anything from about 33% occupancy in Spain up to 100% occupancy in Germany. So, Dan, from your perspective, what are your clients telling you and how are they planning their density?
Um, well, Steph, I think the answer, there's a two-tier position here. There's how were they occupying their offices prior to the Prime Minister's sort of encouragement not to reoccupy again? But even when we get through that, how are they going to occupy in a COVID landscape? And actually, I think the more pertinent one is how they're going to occupy in a post-COVID landscape. And almost the first one is easier because that is driven by building management, health and safety, etc., and taking our own office as an example. We've got a modern office environment with sensibly sized desks, and we can occupy it close to 50% density in our working areas, the conventional desks, but the sort of communal areas of soft seating and meeting rooms, far lower densities, probably sort of around 25% or 33% at the most. So that gives you an idea of how an office, if it is operational in London at the moment, is looking. And I think when we still got COVID, it's not going to change dramatically. I think the more interesting thing is about the future of the office and how different organizations are seeing this as an opportunity. And certainly with the combination of COVID having an impact on how the office works, the inevitable impact on the bottom line of businesses, there are a lot of challenges around how that will work in the future. I would say, as the broadest rule of thumb, whether that's for me and my team talking to clients or workplace specialists talking to clients, the view is about a sort of 20 to 30% drop in utilized office space. I think that's a combination of fewer days in the office. Clearly, I don't think anyone's expecting to be out of the office all the time, but I don't think anyone's expecting to be in, or very few people are expecting to be in the office all the time in the future. But we do expect that there will be some less densification of areas where people are currently packed in offices, but that's more than balanced by fewer people working in the office 5 days a week. If you were doing 5, you're probably going to be doing 3 or 4 days a week in the future.
Mm. Mm. Which I think kind of leads us on to that next bit quite neatly, really, which is, I mean, you kind of almost can't look anywhere at the moment without seeing a headline that's like the death of the office is done, and and realistically, we have, I guess, three sort of options to move around in within that, whether that's the traditional office space that you and I are used to, whether that's sitting at home as I currently am now, and as are you, or whether that's something utilizing flex space and actually taking much shorter leasing terms than traditionally corporates would in the past. How do you see that playing out? And realistically, I mean, as you said, we've got this short-term conundrum, but will we see a structural shift? Will we see change? And will that ultimately cost the corporate more because flex space is more expensive, or will it cost them less?
Well, I think certainly the few clients that we have that are saying, you know what, we're going to try and make a decision in the near future about, and those are because they've had a lease and they're definitely normally in too much space because of COVID. And I think if you're in that situation now, and I think for the next couple of years, you're going to be right. The good news is I've got an opportunity to move. There's going to be a lot of choice, and the pricing is probably going to be lower than it was pre-COVID. But how do you define what a good office looks like and feels like? And nobody really knows at the moment. So there is a definite trend where if you are going to be looking for space at the moment, people are looking for flexibility, and also, particularly with the audience that we've got here in mind, when you go to Treasury and you say, right, I found this office space, I want £100 a square foot capex for fit out, you might well get rebuffed. So a flexible deal where a landlord is providing space, and interestingly, that doesn't have to be a serviced office operator. It could be an occupier with surplus space who's adapting their space to fit you as another occupier coming in, or it could be a provider of managed space. So I think without any question, you are going to see the continuation of more lease flexibility, and aligned with that, capex burdens starting to pass more onto the landlord than the occupier.
Yeah, I think so. And kind of sticking to that point of costs and rents. I mean, in my world, we talk about vacancy rates, we talk about grey space, and there we're really talking about the levels of good quality space that are coming to the market, and then, as you said, that occupier-led space that's perhaps coming back to the market. They could be of quite different quality profiles, and certainly if you look across Europe at the moment, the prime space that's coming through is still on really tight vacancy. So that would indicate that costs will be held up. But that grey space, that subletting space, it has the ability to increase very quickly. And in London, that's pretty much doubled over the last quarter. So from an occupational perspective, you've got these kind of slightly conflicting areas, haven't you? One saying that you're going to see rents held up and costs held up, and one saying that actually there's going to be quite a lot of supply, which puts you in a really good position when you're entering negotiation. What's your kind of view about the different quality of space and what that means for a company in terms of its own productivity and operations?
Yeah, I mean, I think you're going to have a number of different tiers in the market. I think for any quality of space, if you're looking for what's called day-to-day size space, 10,000 square feet traditionally for, let's say, around 100 people, there is going to be a reasonable choice of that, which is getting greater on differing types of lease structures. And so the pricing for that is going to become more advantageous for the occupier. When you're looking at really large organizations, FTSE 100, big law firms, Fortune 500 businesses in London, and let us say you're in a building that is dated, it's got a lease expiry in 2 years' time, you're not, because you never have a huge amount of choice if you're looking for a big chunk of space. And if you align that fact with the situation where the bigger the occupier, they tend to be more and more sensitive around their carbon and sustainability goals. And if they're in a 20-year-old building, then it might look financially attractive to restructure in that building, but actually those carbon targets may well override that. So I think what you're going to see is for large occupiers, there will still be, and they are still being negotiated in London at the moment, some major pre-lets of tower buildings for major organisations, because they don't really have the choice. They've got to get on with it. Plus, if you're taking, I don't know, 200,000 square feet in a tower now, you're not going to be moving in for a couple of years. So you've got time to plan your fit out in a post-COVID world. And B, you'll be able to structure a deal to drop some space, acquire a bit of extra space during the construction of the building. So those kind of large pre-letting deals that catch the headlines, they will still be there. And you're going to need to pay a rent that gives an economic return to the developer. Otherwise, the schemes aren't going to go ahead. So you're going to have that tier of pricing. I think you're then going to have a lower tier of pricing for, frankly, everything that is available right here, right now, with the one caveat, particularly in the London market that I work in, you have different villages, different spots where there's more demand, less demand, and so that the impact will be greater or lesser. But you are definitely going to see that two-tier market and of therefore a greater variance in pricing between the best space that's coming through at the right time, which is sometime in the future, but committed to now, and the rest of the market.
Yeah, I think that's really true, and it's something that we're going to be seeing across the whole of the European market. So, Dan, if I can just put you on the spot in the last few seconds of our interview, although I think pretty much everything you said is relevant across European markets, and our colleagues in different places would I think echo a lot of what you've been talking about. But if we think about London in 12 months from now, looking about a grade A rent, how much will it have gone up or probably down in 12 months? Where do you see rents going, and what kind of level do you see them hitting?
Pre-lets off plan, not really changing very much. Everything else going down.
Dan, as
That
insightful as
simple.
ever, thank you so much. Lovely to speak to you.
Thank you, Steph. Bye bye.